Hey, this is Matt from InvestiQuant. Today is Thursday, August 13th, 2020. And yesterday we saw some varying patterns within the different indices, but the S&P 500 gapped up and pushed higher, and it made a new 52-week high close in the ES contract. That's on an adjusted basis. And in doing so, it left an unfilled up gap. So it gapped up after the big sell-off from a couple days ago and then pushed higher, closing at a 52-week high. So what I'm going to do this morning is take a look at that pattern and see how it has performed the next day when you get a gap down like we are currently seeing in the overnight session. So let's test this. We'll go in to Discover and select all four instruments, even though this is not applicable to all four instruments today. And then I'm going to go into Setup, select Intraday Open as a long. So this is a long at 9:30 a.m. Eastern Time. It'll exit at the close of regular trading hours, which is 4:15 p.m. Eastern Time. Within the opening filters, I'm going to say that we are gapping down within the prior day range. That is currently true. And then I'm going to go into price patterns, and I'm going to say that yesterday closed at a 52-week high. So I can find that here within the new highs section, day after 52-week high close. And then the prior gap section up here, I can say that yesterday was an unfilled up gap. So that's available right here, day after unfilled up gap. And because this is 52-week high, I don't need to add a 200-day moving average to it because by definition, it is going to be above that. So let me click View Results here. And here we go. These are the results for going long at 9:30 a.m. Eastern Time when gapping down within the prior day range after an unfilled up gap that closed at a 52-week high. So historically, this has happened in the ES 74 times. We've got 71 samples in the NASDAQ, 61 in the YM, 45 in the Russell. And looking at the win rates on these, they are all a bit more bullish. So you've got ES coming in at 62%. You've got NASDAQ, the strongest, 65% for that pattern there. YM 57%, and Russell 58%. So this is not applicable for all of these instruments today, but it is applicable for the ES, assuming we gap down in the prior day range, which is yet to be determined as of the time of this recording. But historically, all four of these instruments have favored the bullish side when this pattern was in play. So a little bit more of a tendency to print a green daily candlestick with this pattern. Now, this is for gapping down within the prior day range. The gap right now at the time of this recording is not all that big. So there is a chance this could be an up gap by the time we open. And if it is, I would encourage you guys to take this pattern and dig into it in the opening filters because the bias will change. So that's something you can dig into here in the opening filters. You can try some different gap direction. You could do a gap size by percent of the 5-day ATR, or even one of the pivot zones, which is one of the new filters we've got available. But there's a couple different ways that you could size up this gap. Maybe by the size of the 5-day ATR would be one way that I would suggest looking at it if you're going to. So hopefully you found that interesting. Good luck, and we will see you next time.